Hello, everyone. Welcome to the market opening bell on Wednesday, July 2nd, your 10-minute guide to the stock market. The Hang Seng Index opened 9 points lower on Monday, then repeatedly declined, falling as much as 219 points to a low of 24,064 and closed near the day's low at 24,072, down 211 points or 0.9%. For the month, the index rose 3.4%, gained 4.1% in the second quarter, and surged 20% in the first half of 2025. The Hang Seng China Enterprises Index fell 84 points or 0.96% to 8,678, up about 19% year to date, while the Hang Seng Tech Index dropped 38 points or 0.72% to 5,302, up approximately 18.7% in the first half. Total market turnover reached 242.2 billion Hong Kong dollars. Hong Kong's three major indexes ranked among the top 10 globally for first half gains. Southbound funds net purchased 5.22 billion Hong Kong dollars of Hong Kong stocks on Monday, with net buys including China Construction Bank at 957 million, SMIC at 714 million, Meituan at 377 million, Kuaishou at 314 million, and Innovent Biologics at 313 million, while net sales included Alibaba at 551 million, Bank of China at 380 million, Tencent at 325 million, PopMart at 157 million, and Xiaomi at 114 million. Statistics show southbound funds have sold Tencent for 22 consecutive days, totaling 21.894 billion Hong Kong dollars. Sport China Construction Bank for 14 days, totaling 10.316 billion, and SMIC for 8 days, totaling 5.625 billion. In June 2025, southbound funds net bought 80.251 billion Hong Kong dollars, marking 24 consecutive months of net inflows. The first half of 2025 saw 731.187 billion Hong Kong dollars in net buys, nearing 2024's full-year total of 807.866 billion and more than double 2023's 318.841 billion. Technically, the Hang Seng Index faces resistance at 24,500 and may test the 10-day and 20-day moving averages near 23,950. If these levels break, it could fill the June 24 upside gap, spanning 144 points between 23,689 and 23,833. In the Asia market, the Shanghai Composite rose 2.8% in the first half. The Shenzhen Component and Chinex each gained 0.5%, while the Beijing 50 surged 39.5%, hitting a record high. Sectors like AI large models, humanoid, robots, new consumption, innovative drugs, and solid-state batteries attracted funds. Nearly 20 bank stocks hit all-time highs. Small-cap stocks outperformed, with over 3,700 stocks rising and more than 100 doubling. On Tuesday, A-shares rebounded, with the Shanghai Composite rising 13 points or 0.4% to 3,457, and the Shenzhen Component gaining 11 points or 0.1% to 10,476. Combined turnover was 1.466 trillion yuan. China's National Bureau of Statistics reported June's manufacturing PMI at 49.7, up from 49.5 in May, slightly above the expected 49.6 but below the 50 expansion threshold for the third month, pressured by the US-China trade war. Without a tariff truce or large urgent orders, manufacturing recovery may weaken. The non-manufacturing PMI rose to 50.5, a three-month high. In the first half of 2025, Hong Kong welcomed 43 IPOs, up 43.3% from 30 in the first half of 2024, raising 106.7 billion Hong Kong dollars, surpassing 2024's full-year total of 87.65 billion Hong Kong dollars, driven by large IPOs like CATL, Hengrui Medicine, and Haitian. Of the 43 IPOs, 27 rose, 3 closed flat, and 13 fell on debut, with a 30.2% brick rate, while A-shares saw no IPO bricks among 51 listings. Hong Kong IPO brick rates have trended lower since peaking at 45.7% in 2021. Biotech firms like Duality Biologics up 116.7% and Transthera Sciences up 78.7% led gains, alongside consumer stocks like Misha Group and Antigeni. 8 A-share firms listed in Hong Kong via A+H, with a 25% brick rate. Biotech and new consumption sectors offer high reward potential for IPO subscriptions. Canada scrapped its digital services tax, easing US-Canada trade tensions, lifting US stocks on Monday. The Dow rose 275 points to 44,094. The S&P 500 gained 0.5% to 6,204, and Nasdaq rose 0.5% to 20,369, with the latter two hitting record highs. In the first half, the Dow gained 1,550 points, while the S&P 500 and Nasdaq rose 5.5%. Wall Street banks passed the Fed's stress tests, boosting bank stocks. On Tuesday, the Dow climbed 400 points to 44,494, while the S&P 500 fell 0.1% to 6,198, and Nasdaq dropped 0.8% to 20,202. Trump's big and beautiful tax reform passed the Senate 51 to 50, but faces uncertainty in the House vote. Elon Musk criticized the bill's deficit impact, threatening to form a new party. Trump, asked about deporting Musk, initially said he was unsure, later adding it would depend on circumstances, noting Musk's frustration over lost EV subsidies. Tesla shares fell 5.3% to $370.71 after dipping below $300. U.S. economic data showed June's ISM manufacturing index rising to 49 from 48.5, beating expectations of 48.8. May job openings hit 7.769 million, above the expected 7.3 million. Tonight's ADP private payrolls data is expected to show 110,000 new jobs, up from 37,000. Our stock pick today is Kingboard Laminates, stock code 1888. As the electronics industry emerges from a cyclical trough and enters a new growth phase, Kingboard Laminates reported a significant recovery in its 2024 performance. Revenue increased by 11% year-on-year to 18.541 billion Hong Kong dollars, despite a 82.9 million Hong Kong dollar credit impairment provision for bond investments. Basic net profit attributable to shareholders surged 36% to 1.349 billion Hong Kong dollars. In the laminates business, demand from traditional consumer electronics markets gradually recovered, with particularly strong growth in air conditioning and optoelectronic panels. The rapid development of the AI industry, along with ongoing advancements in automotive electronics and intelligence, further boosted the demand for laminates. The laminates market is shifting towards small batch, diversified production. The group's laminates division actively developed new products to meet varied customer needs in performance and pricing, while exploring new market segments. Product portfolio optimization progressed well, with sales of high-end, high-value-added products steadily increasing. The laminates division's revenue rose 11% to 18.345 billion Hong Kong dollars. Additionally, significant copper price increases were offset by orderly price adjustments in laminates, which not only mitigated cost pressures but also improved the division's gross margin by enhancing production efficiency, reducing energy consumption through technological improvements, and cutting labor costs via increased automation. EBITDA rose 26% to 3.023 billion Hong Kong dollars. The group's financial and liquidity position remained robust. As of December 31st, 2024, net current assets were approximately 8.036 billion Hong Kong dollars, with a current ratio of 2.39. The net debt ratio dropped significantly to 9% from 16% the previous year. Entering 2025, strong electronics market demand drove significant shipment growth in the first 2 months compared to the prior year, with prices for laminates and its materials, such as fiberglass fabric and fiberglass yarn, all rising. The rise of AI technology has spurred growth in cloud data centers, robotics, autonomous driving, and smart wearables, while high-speed network upgrades continue to stimulate demand for electronic products. Robust performance from downstream printed circuit board (PCB) customers will further drive laminates demand growth. Leveraging vertical integration and economies of scale, the group's competitive pricing, industry-leading gross margins, and resilience are expected to sustain revenue and profit growth. The group has heavily invested in its laminate R&D center, successfully developing high-frequency, high-speed products for AI server GPU motherboards, as well as ultra-thin VLP copper foil for AI server HVLP3 and IC packaging substrates. Data centers and cloud computing have significantly increased demand for thick copper foil. The group's latest 1,500-ton monthly copper foil production capacity in Lianzhou, Guangdong will be fully utilized in 2025, greatly enhancing cost efficiency. Meanwhile, low dielectric fiberglass yarn, critical for AI components, is in short supply. The group's 500-ton annual low dielectric fiberglass yarn project in Qingyuan, Guangdong is set to commence production in the second half of this year to meet market demand. In 2024, the group expanded its laminate production capacity in Thailand to 400,000 sheets per month, reaching 1 million sheets by year-end. It plans to further increase capacity in Thailand by two phases of 400,000 sheets each, reaching a total of 1.8 million sheets per month to support overseas customers, including the growing overseas operations of Kingboard Group's PCB companies. Recommended buy at 9.35 Hong Kong dollars, target $11, stop loss at $8.9. I do not hold the above mentioned stock.